Hello from Hong Kong and welcome to this week's market update. High-flying, hyper-growth, clean energy, new economy stocks, they continue to hurt this week as the market continues to focus on value and reopening names. Now, if we look at crypto custodian Coinbase as the poster child of the new economy, its stock fell for the fourth straight day, down 6% on Thursday. Now, the stock has lost all of its gains since listing and now sits just above its IPO reference price of $250 a share. Cathie Wood's ARK has been busy buying more than $750 million of Coinbase stock in the past few weeks. Wood's flagship innovation ETF closed below its 200-day moving average in a bearish signal. Markets are currently distracted by value despite massive earnings beats for growth and tech names. Stocks like Amazon and Microsoft are below their record highs, and you may think, well, that's because they ran up so much over the past year, and now value names are simply catching up. Well, if we look at some reopening names, stocks such as Marriott recently reached higher levels than they were pre-pandemic. Now, over the past 1 year, Marriott stock is up 72%, whilst Amazon stock is up 41%, and Microsoft stock is up 36%. Whilst reopening stocks might make sense when you look at consumer savings rates and everyone's desire to travel, mass travel, though, is unlikely to resume as quickly and easily as many imagine. And when it does, it certainly won't be a pleasant experience, with testing required to cross borders likely to lead to even longer lines, and of course the cost of having to test. Now, some consumers may be able to bear the cost, but many won't, and that will likely limit the ability for airlines and hotels to regain pricing power. And let's not forget that value names have had to borrow huge sums of money just to survive the pandemic. Moving on, pharmaceutical stocks were jolted on Wednesday by news that the Biden administration supports the removal of intellectual property protection for the COVID vaccine. Whilst this may appear an altruistic move, it is not an immediate solution to the lack of vaccine access. If Pfizer and Moderna were forced to unveil the mRNA vaccine data to rivals to allow for copycat vaccines to help immunize the world, the task of setting up production of new mRNA vaccine facilities would likely take more than 1 year, and that assumes that Pfizer and Moderna were willing to work with any rival wanting to produce the vaccine. Now, if we look at the example of Johnson & Johnson, which in March announced it would team up with rival drug maker Merck to assist in increasing the availability of the J&J vaccine, retrofitting an existing Merck facility will take at least 3 months, and the two companies were entirely collaborative. Setting up an mRNA facility would be much more complex, and Pfizer and Moderna are unlikely to be overly willing to give away their processes. On Thursday, Germany outlined it is not supportive of the removal of IP protection, supporting German company BioNTech, which co-produced the vaccine with Pfizer. Moderna stock is down 12.75% this week. Pfizer stock is up 0.33%. That's all for this week's market update. I'll see you all again next week.